Got him.
Nothing beats a Jet 2 holiday. And right now, you can save £50 per person.
Yeah.
50 pounds is what did him in. Got him. Wow. Oh, poor baby. Poor baby. Poor baby. Got him. Let's check this one out. Oh! Ooh, I bet that hurt. Sad.
Oh, no.
What is going on here? Also, poor baby. All right, folks, wake it up. It's the Blacksmith Podcast. We are back with another financially savvy Saturdays. I'm going to get it. Financially savvy Saturdays. And we have some good stuff lined up today. First and foremost, what did that market do this week? And then we're going to take a look at what the market did for July. We're going to talk about the best and worst months historically for the market. That way, if your portfolio went up or went down within a certain month, you can check that and say, oh, yeah, the market does go down in this month. Oh, yeah, the market does go up in this month. So at least you know that it's not you and what you're doing, right? At least you can be prepared. We're also going to talk about, now we're not going to cover the Robinhood call, but I am going to mention their earnings call for a couple different reasons. And they had some big news as well. They announced the IPO of a new internal stock. And I think that is about it. So without further ado, let's get into. I don't have anything else to say. I was going to say bars, but no, I couldn't close it. Couldn't bring it home. All right. So the first thing, if you're looking at my screen right here, it says the market surged up to record highs last week. S&P 500 gaining 3.6%. That is big. NASDAQ jumping 5.2%. Remember, NASDAQ is tech, right? S&P 500 has all different, I almost say communities, but they have all different consumer goods, tech, healthcare sectors. S&P 500 is made up of different sectors. NASDAQ is tech, okay? So tech did better than a lot of different sectors if you just look at the numbers right here, right? The rally was driven by strong corporate earnings. So earnings calls, a lot of companies did earnings calls last week and in July. Let's see, softer than expected. Oh, wait, easing of oil prices, renewed AI enthusiasm, and a softer than expected jobs report that reduced fears of the Federal Reserve rate hikes. Albeit, rumor has it. I don't even like that song. I don't know why I did that. So rumor has it that there may actually be a rate hike coming from the Fed. So we'll see what the Fed chair has to say on that. I might pencil that in to, wow, my pen just flipped when I picked it up. I couldn't do it again if I tried. So I might pencil that in just to see what the Fed is talking about as far as rate hike or rate cut, and see what they come back. Not talking about TUMBAT with an apostrophe after the TUM. Let's see. So key drivers. So we have strong corporate earnings. Profits continue to beat expectations with broad growth beyond mega cap tech companies, lifting investor confidence. So that's important because if you're mega cap companies, which tech has been moving the market for a long time, if they are announcing great earnings, then of course investors are going to be more confident in the market. Look, folks, we give you the ins and outs over here on the Blacksmith podcast, and especially these financially savvy Saturdays. But I'm going to tell you something. Not everybody invests like this, right? The bulk of people, I would dare say, invest like you're not supposed to, which actually further helps drive the market. So when the stock is surging up and the news shows it, then most people will go ahead and invest in it. And then when they say, oh my God, the stock market is falling off the face of the earth, they will sell, right? And the problem with that is they are buying at the high. So it's surging up 20, 30%, which is a lot. Let's say 10%, right? And you buy it at the 10% that it surged up, and it drops down to where from before the surge, it's up 2%. It drops down 8% from that 10% high. Somebody who bought it before the surge is up 2%. You are now down 8%. And it may not go back to that price for another quarter, another year, right? You never know. So that is why you never buy at the high unless you want your investments to, can't say it. But you get it, right? Bars. So anyway, I saw a comment in the chat. Let's get to it. They are looking at the next CPI data next week. Who's that? I'm kind of lost. And it's not you, it's me. I know no one's ever heard that in the breakup before, but no. The Fed. Oh, the Fed. So you probably popped this one in a while ago. Okay, so the Fed's looking at the CPI data next week. So then we'll have a clearer picture of what the Fed is talking about next week. That's what he's talking about. Thank you, Why Invest, the Blacksmith, one of the Blacksmith podcast alumni, good dude, met him in person. He does exercise, ladies and gentlemen. His portfolio as well as his muscles. Okay, so there's that. But again, people watch earnings reports, right, to see how a lot of the mega cap companies are doing, sometimes before they invest their money into the market. Because after good, strong earnings reports, the market goes up because people are like, oh, this is good. I heard good news. Let me put my money here. That's how it really works. When you could have been invested in it while it was low, so if it's a strong company and you believe in it, that way when the earnings report comes in and it goes higher, now you're up more profit. But again, most people don't invest the way they probably should. So that's why the strong corporate earnings is a big is a big one. And then also remember, not every investor is a retail investor. You have businesses that buy shares of other companies as well. And they do it all the time. And it's one of the ways that they grow revenue for their company. So think about it like that too. And they also invest like that sometimes. All right. So AI demand confidence, renewed enthusiasm, and stabilizing views on artificial intelligence propelled heavy tech sector gains. I think that one kind of speaks for itself. AI is still in infancy stages, but AI is getting bigger, faster, stronger. The capabilities of AI is only improving. Sorry, I had an air bubble in my esophagus. Yeah, AI is only improving, and it's really improving at the speed of light, right? Um, and the capabilities are only going to get better. It's only going to go faster, especially as we introduce quantum computing, quantum computers, quantum computing into our daily lives. I'm sure it's going to be, at an industrial level first before it gets down to consumers. But at that point, AI is going to it's going to grow rapidly like fruit fly, except it's not going to die as quickly. All right. Pullback in oil prices early week, progress on easing geopolitical tensions and potential reopenings in the Strait of Hormuz drove crude prices down, alleviating energy inflation fears. Now, as one who is active duty Navy, I have actually been in the Strait of Hormuz a few times. I've gone in and out of the Strait of Hormuz, I don't know, maybe 5 times or so. I think initially we went in around the end of 2013, came back out sometime in 14. That was my first deployment, and then I got deployed again in 15. Um, and we were back in and out. This time we went into the Gulf of Aden, came back out, went somewhere else, went back in, came back out. A couple times we had different tasking, but yeah, I knew about the Strait of Hormuz long before this kind of stuff. Less than 2% served. So, when you are, I could tell you firsthand from being on a ship that went through the Strait of Hormuz and knowing that Iran had planes and weapons aimed at you, it just makes you a little tense. The thoughts of perhaps never seeing home again will cross your mind. Um, but you get up every day, you put your coveralls on one pant leg at a time, and you put your boots on and you go do what you're supposed to do. See, if everybody does their job, the cooks cook the food and don't worry about anything they can't control. The maintainers go and fix the planes. The pilots fly them right. The equipment maintainers go and fix radars, and the air traffic controllers make sure no one collides and give them the right calls and get them on deck and off the deck. The air boss launches and recovers them right. The ABs get them in and out of the catapults. Everybody does their job. It all works. And the ship I was on didn't have catapults, but still. I'm just saying, everybody has a job to do. We all did our job. We all came home. But the Strait of Hormuz, if you are active duty, can be a very scary place because of geopolitical tensions. So it's good to see the oil prices ease because California, I think we probably have among the highest gas prices out there. Let's just look that up, shall we? Who in No, that's too broad. What state in the US has the highest gas prices? Let's see. Now y'all know I don't type 60 words per minute. California. Wow. I love being first overall in a lot of stuff. If I'm playing Halo with my friends, which I haven't played in years, if I'm in a foot race, which I don't really race people, I like being first in a lot of things that are competition that I might be a part of. I don't like being first in gas prices. All right, I don't like being first. 566 per gallon for regular unleaded. Hawaii and Washington follow closely behind as the most expensive states at the pump. So when I say I'm elated to see that oil prices have relented a bit, I am elated because, yeah, you see that? Some of y'all would like faint or just go somewhere else. And then when you hit your 10th or 11th gas station, you realize, wait, that's just how it is. Yeah. All right. Let's see. I'm not even going to look at the cheapest states. That was just a quick as an aside. All right. So pull the soft jaw. Jesus, I can speak. Here we go. Soft jobs report. July's employment data showed a decline of 23,000 jobs, signaling a cooling labor market that caused traders to scale back expectations for a September interest rate hike by the Fed Reserve. All right. So there you go. There's more data that goes into how people invest or why invest. Jobs report and the number of jobs and whatnot. So now on this side, I use this feature in Google. Gemini, I will ask it to break down the market, bounce back, or just use this tab and ask it questions about stuff here or to expound, right? So I ask it to summarize or break down the market bounce back, which it did. S&P 500 gained 3.58%, which it says 3.6 here. You get it. NASDAQ 5% surge. Dow Jones, small cap Russell 2000, right? If you never heard that, it is a thing. And it tells you it's small cap companies. Hold on, my speaker turned off. All right, there we go. All right, so a softer July jobs report. We already read that. Geopolitical. We already read that. And then AI return on investment validation. Massive earnings validated from cloud hyperscalers ease Wall Street's recent anxiety over multi-billion-dollar AI capital expenditures. A lot of companies are going to be spending on AI. I'm going to tell you right now. AI is something that, yes, it came from the tech world, but you have to understand that it didn't stay in the tech world. AI is something that is, it's a product that, how can I put it, will span across all sectors. Just put it that way. You don't believe me? Watch this. Well, it came from the tech sector, right? So tech sector created it. We already know how it's being utilized in the tech sector. Now let's move over to consumer goods. Let's see. Costco can create algorithms and help with ordering and shipping with AI assistance and automatically track their inventory. And when they get to a certain point, do an algorithm. When we get 20% on this, 45% on that, 52% on that, reorder X amount. They can utilize AI assistance to help them with that, right? And that's just one way. But we're going to move to the medical sector. AI is going to be utilized in surgeries and orthoscopies and things when they go in with cameras and stuff. What do we see here? And probably to simulate surgeries. If we cut this, what happens? If we use radiation here, what happens? All different kinds of things. AI is going to go across all sectors, believe it or not. So when you hear them keep talking about AI, broaden your horizons here. It is not just a tech thing. It's going to go across all sectors. Vlad, the real Vlad, Vladimir Teneth, he said, if you don't know him, he's the CEO of Robinhood. He said that it used to be 10 years ago that if you, in order for a company, a tech company or a company to be successful, 10 years ago, you used to have a tech component in your company. He said 5 years from now, it'll be AI. Your company, no matter what it is going to have an AI component, right? So take it from me or take it from a CEO that I think he said he was worth $2 billion 2 or 3 years ago when he showed up on Earn Your Leisure, I think for the second or third time. He's been on 3, but I think it was his second or third appearance where he said that. So you can take it from either one. I would tell you he's a lot wealthier than I. $2 billion? I got $2. All right, so I ask it also, tell me about what's going on with the Magnificent Seven, right? So let's just roll through these. NVIDIA. So we have, I'm going to make this I'm looking at the market, but I'm going to make this a different sector of the video or a different chapter. So this chapter is not too long. So I just time stamped it right now. Anyway, NVIDIA. surged 11.5% over the past week, moving from 200 to 223. And the reason being strong ecosystem momentum and renewed investor enthusiasm for the hardware providers as enterprise AI spending forecast continues to expand. So there you go. More enthusiasts about AI, and that's only going to continue. So I'm going to tell you, guys and gals, put your money in the best companies and let it sit, let it ride. Your money, it shouldn't be your last $5, right? But if you have $5 that you can afford to invest, set it and forget it. Put your money in the best companies out there that are doing work and going to be around for a while. And they're on this list. And let it ride. Don't look at it. And I mean, you can look at it, but don't worry about it. Leave it there for the long haul. 5, 10, 15, 20, forever. In perpetuity, right? Let it ride. This ain't the casino, though. Don't let it ride all on red. Okay, so Microsoft post-earnings rebound following a strong Q4 print. The best driver behind Azure's 43% growth in its cloud division, crossing 100 billion annual run rate, confirming that AI enterprise adoption is translating directly into top line revenue. Again, AI. So for the first two that we covered in the Mag 7, AI. Amazon, here goes another one. I bet it's AI. Performance, strong positive week following earnings momentum. AWS accelerated revenue growth to 37% year over year, 42.2 billion, reinforcing Amazon's confidence confidence in Amazon's infrastructure, monetizing alongside resilient retail operational efficiency. I can be wrong sometimes. It wasn't AI. But Amazon utilizes the heck out of AI and robots. Definitely robots. Meta platforms. Performance bounced back off its recent pullback floor to close around 592. The main driver, key technical support in the 560 to 590 level held firm for an eighth consecutive time as buyers stepped in following prior sell-offs over capital spending. Theirs wasn't AI either. Oh, excuse me. Whew. Did you ever burp and yawn at the same time? It's weird, but it happened on camera. I'm not AI, okay? When you watch these TikTok videos and stuff, you really can't tell what's real anymore. But this guy right here, this guy, I is not AI. Okay, so Tesla, let's look at Tesla. Performed 3.3% across the week to end around $300. Broke a steep 3-week losing streak. Bars. Driven by strong retail investor support and broader equity market tailwinds. Okay, it's a lot of gobbledygook. They're saying retail investors are investing in them. Good to go. That's what drove it. I mean, you could have just said that. But either way, Apple performance up modestly, closing at $313.33. So I'm guessing up modestly. They probably went up less than 3%, or they probably would have said it, probably less than 1% or something like that. We could look at it, not that big of a deal. Rebounded steadily from its late July dip as broader mega cap sentiment turned positive. And they are a mega cap company. Remember, if you didn't know, or if you did know, I'm bringing it back to remembrance for you all. Apple was the first $1 trillion market cap company. NVIDIA was the first $5 trillion mega cap company. I believe there was another one, but it went back under, or it got close. Can't remember who it was. All right, let's look at Alphabet or Google. So Google rebounded initial earnings, weakness to close around 354. Probably another one that probably slightly just went up. Not enough to mention the percentage. The main driver was their cloud posted massive 82% year over year revenue growth, 24.8 billion. Performance was slightly moderated midweek due to news of executive restructuring across its DeepMind and AI research teams. Look at that. But this one's AI related, but the catalyst was they're shifting the C-suite executives. If you never heard that term before, you're talking about CEO, all the chiefs, right? Chief Executive Officer or CEO, Chief Financial Officer or CFO, the money man, Chief Technology Officer, CTO. They're shifting around the C-suite executives. Now, why would that stop you or pause you, right? I am an avid investor in Robinhood. It's all good when you invest with Hood, not in the hood, in Hood. So if I heard that Vlad Tenev was not going to be the CEO, I would give real pause to investing in adding new dollars to Robinhood. I need to see Vlad, I know as CEO, how he kind of thinks and innovates. I like how he speaks at the press conferences. He's nebulous to the slightest degree because he wants the investors to have the warm and fuzzy. He's only nebulous over things that you know he can't say yet, like partnerships or something that his competition could undercut them in if they release the news too soon. So anything else, he's very, very he's very open about it, right? So if he was going to shift from CEO, yeah, I'd pause on who the heck is going to be the CEO. I'd pause on investing. Shiv Verma, right? I'm just getting to know Shiv. Shiv is new, right? It was Jason Warnick before, and Jason and Vlad were such a great 1-2 punch. Shiv seems to be a very nice addition to Robinhood, but I'm just saying, when people get used to the C-suite executive leadership, like Alex Karp at Palantir, if somebody else said they were taking Alex Karp's place, people would pause on investing with Palantir. And he's one of the founders there, just like Vlad is one of the founders of Robinhood, one of two, and Jensen Wang, or Jensen Wong, I don't know how to say his last name, to be honest, but he is the CEO of NVIDIA and one of the founders. I think there were two there as well. When people move around that high up, yeah, investors will pause, right? So that shouldn't spell weird to you. That should actually just be normal. It is what it is. All right, so moving on very smartly, we're going to talk about July's performance. July. We could be up in the market, but July. Okay, so July 2026, mixed volatile month, driven by second quarter tech earnings, making a decent yet polarized period rather than a runaway success. So July was not good for my portfolio. I think, let me see. What did I do? So in the last month, I'm down 17.5%. But in the past week, it's been August. So in the past week, I'm up 33%. So July was not very kind to my portfolio. All right. So, and that's just me. And then here's the thing too. I'm a more risky, a riskier investor. Typically, hedge fund managers, financial advisors, mutual fund managers, they will tell you to have your portfolio follow it was either the 80-20 rule or like the 70-30 rule. 70 or 80% of your total portfolio's money, right? Wealth, because it's invested, right? Should be wrapped up, tied up, invested into index funds like the S&P 500. Um, and index funds trade after the market close. And ETFs, which is like VTI, VOO, which is Vanguard's version of the S&P 500. There's a lot of ETFs out there. ETFs trade while the market is open. But because they have different sectors in them and different companies in them, the idea is create something that's going to get steady growth year over year. So 5%, then 10%, then 12%, then 7%. Steady growth year over year, guaranteed by the fact that there's different sectors in it, there are different companies in it. So if one company has a bad year, fantastic. There's 49 other companies that had so-so years or good years, and so it's up 7% overall. One company can't drag your portfolio down. That's why you put 70, 80% of your wealth into ETFs and indexes, right? You'll see the least amount of fluctuation in your portfolios. Now, if you have a 401k, they already invest your money like that, right? So for me, I can be riskier with what I'm doing because my portfolio went way down from last year, but last year it grew up over six figures, right? So if I'm okay and I'm not as emotional, I can survive the hills and valleys of investing, right? Mentally, because I already know how it works. So that's why we want to go over this stuff with you guys. So let's look at July. So the best months for the market historically have been November, December, April, and July. They showed the strongest months. Now, I'm not gonna lie to you. If you search this, there'll be a couple of different months. Sometimes you'll find like what else? Let me think. Let me just go through them and I'll see if I can find. I found some different months sometimes, but I'm pretty sure these are pretty accurate, right? Why April? Let's start from January. Why April? April because the consumer, what do they call us? I just said it. Consumer investor, something like that. I can't remember. But us plebeians, us paupers, we get our tax returns in April. And what do we do with it, folks? Do we pay off debt? Do we buy? Do we invest? We go buy liabilities. So yes, we help consumer goods and all other kind of sectors because we get our tax returns and we spend them. So April is a great month for the market. Lots of spending going on. July is a very strong month as well. July, I can't off the top of my head tell you why. Bars. November, though, remember, November, there's a lot of consumer spending because you have Thanksgiving going on, but then also you have Black Friday. And Black Friday usually is the single most money spent day for America every year, right? That's usually is Black Friday. That's why they have all the deals on Black Friday, and that is in November, the day after Thanksgiving. Then you have December, and we already know. So right after Black Friday, now you have all of your holiday spending. People do holiday spending on Black Friday as well, but I guess Black Friday, you could say, starts your holiday spending season for the market. And then it goes through December. So it peaks all the way up at Christmas, and they put everything on sale. So January might be a down month for the market because it's coming down off of a high, not because January sucks. Worst months: September, September, September. Accompanied by weakness in August. Well, if July is a great month for the market, it has to come down, right? July wouldn't be so great unless it peaked, right? So it cools down in August, making July stay up here like that, right? So then June, so July, June, August, June, July. Make sense? So it's flat, goes up, comes down, flat. And in January, again, January I don't think is like terrible. It's just people are broke after Christmas, so they're not spending as much. It's cooling down off of Christmas. So the old market adage was sell in May and go away. It reflects historical sluggish activity spanning through summer months. And that's correct. Yeah. The broader trend, July lived up to his reputation as historically positive stretch, supporting strong seasonal momentum. July was a terrible month for the market, or for at least for my portfolio, I say that. All right. So we'll mark that segment as complete, and we are going to get on to another one. Now, here we go. Now, RVI. If you're not sure what RVI is, I guess I should say RVI. Let me not get ahead of myself. I marked the wrong chapter. All right, let me go back and do this, and I'll line that out. I don't know when I did that chapter. Whatever. I'm not AI, folks. All right, so RVI. RVI is Robinhood Ventures Fund I, and it was launched, I think, what was it, March 16th? Something like that. March 6th this year. As you can see, it held, and then it started climbing. And by May, what is this peak? What is this, 13th? May 13th, it was up at $73. And around that time, they had announced that they were going to include OpenAI into it. Now, Robinhood Ventures Fund I was Robinhood's answer to the SEC on not allowing retail investors. I can never think of that word when I want to most of all, but then it just flowed out right now. It's us regular everyday people. We cannot invest in private companies. So Robinhood said, if we put together a fund of private companies, can we IPO this on the market? The SEC said yes. So there are companies that jumped on board and they agreed to be a part of this, even though they're still private companies. So they can allow, before they IPO, they can allow retail investors to get in as well. However, it's not the same as like crowdfunding for them to go public. But either way, because some companies want to stay private. All right, so now that we know what it is, now let's look at what's in it. What's in this fund? Look at that. So Databricks, 12%, almost 13%. You got OpenAI is now in at 11%, folks. So when you are investing into Robinhood Ventures Fund I or one, you have 11% stake of it, not 11% stake. Let me take that back. 11% of your investment in it is OpenAI. You have Mercor, you have Revolut, Ramp, Air Wallet, Stripe, Supersonic, which I like that one. I when we like a couple months ago, we met the CEOs of RVI. I actually like listening to that guy's story. Canva, Aura, 11 Labs, SpaceX. Now you're invested in the SpaceX. Um, Cash and cash equities. Okay, that's 30% of it, 32 almost. And then they're gonna bring whatnot into it as well. Um, Allocation to be reported next quarter. Now I'm excited about a lot of these. Most excited about OpenAI. Can't lie to you. I like that Stripe is in here. I love that Aura's in here. Canva, I'll take it. And SpaceX, I like that. So Robinhood's doing big things with Robinhood Ventures, which brings me to the next segment. See, that was quick. Robinhood did their earnings calls. Now, you know I have to cover it, but I'm not going to cover it here. I am going to cover it maybe this week. Just a little news for me. I'm in a senior enlisted academy, so I am an E8 or senior chief in the Navy, and I'm eligible next year to promote to master chief. But there is a you shall not pass unless you have this requirement, which is the Senior Enlisted Academy, or SEA. And it's in Rhode Island, Newport, Rhode Island. And so it's 3 to like 4 weeks distance learning. So I've been working from home, been on that darn computer doing discussions and papers, essay, doing a group assignments. There's a lot of reading and note taking and stuff like that. It's like I'm back in college, right? I fly out tomorrow morning very early to head to Newport, Rhode Island. So I won't be back for a few weeks. But I will keep y'all posted. I'll try and make some content while I'm out there. But try and show some sights or whatever. Listen, I've traveled more on the Navy's dime than ever when I was a civilian. I was just stuck in Long Island, New York. But the Navy's paid me to go to a lot of different companies, but I'll get countries. I'll get to that in a second. Let me get to this segment because I already marked it. So Robinhood announced that it is going to IPO a new fund, Robinhood Ventures Fund II. So it wasn't RVII, or Robinhood Ventures Fund I. It's Robinhood Ventures Fund I. And here comes two. And this is important because they did allow people to, I think it was last week, request shares of RVII. I did, just so you know. They're going to be on the New York Stock Exchange, NYSE. If you ever seen that acronym and didn't know what it meant, that's it. So look, historically, retail investors have been locked out of private companies in their earliest stages, which can be among the biggest wealth creation opportunities available. Today, Robinhood sets out to change that. They didn't set out today to change that. See, one reason I do like Vlad Tenev so much is because he reminds me of like Walt Disney, who actually reminds me of myself. I was a young kid, just full of ideas, and anything could give me inspiration. And I wanted to change the world as a kid. And I didn't know how I was going to do it, but I just knew I was going to set out to do something great. And I'm still on that Lord of the Rings journey right now. It's not a quick rocket boost into outer space, right? Which takes a couple minutes. It's just it's a Lord of the Rings journey. You know, you go into Lord of the Rings, you're probably about 10 years old. And by the time you came out of the movie, you had a mustache, a full beard, right? I mean, those movies took that long to end. But what I'm getting at is that it's a marathon, not a sprint. And I think of Vlad like that. Him and his engineering, but they were both engineers, right? Him and his engineering buddy wanted to change the world. And so in creating Robinhood Socials, which is what Robinhood was in the beginning, um, they had something and then they wanted to change it into a stock or trading platform, investing platform. So they did that. And now they're bringing back Robinhood Socials. I don't know when. Hopefully they answered it in that earnings call because I'm actually interested in that. And that was a market upsetter, right? That was a sector upsetter, right? They upset fintech because everybody else who was in financial technology before them, they're upsetting them. They're taking customers, market share. They're doing a lot of that stuff, right? However, them battling the SEC on allowing the retail investor to invest into private companies is a world changer. That's a total paradigm shift because us less than $1 million net worth individuals, which is most people alive, who ever existed, are locked out of doing this. And this is why this is such a big deal. So Robinhood Ventures Fund II, RVI2, or RV2, I don't know. The second fund from Robinhood Ventures is expected to IPO on August 13th on the New York Stock Exchange under the symbol RVII or whatever you make of that. And to that, I say, good job, Vlad. All right, so Vlad and Shiv, I will give both. So they're going to IPO on the 13th of August, so that's next week. And if I click my calendar here, what day is that? That is next Thursday. This Thursday coming. All right. They're going to be expected to be at $25 per share. Robinhood Financial customers can request shares. I already did. The request window closes a day before it IPOs. That kind of makes sense. So introducing RVI. It's a business development company or BDC. Never heard that one before. A type of closed-end fund that provides retail investors exposure to a diversified portfolio of private companies in their earliest stages. A closed-end fund is a professionally managed pool of assets, in this case, investments in private companies, that issues a fixed number of shares and trades on an exchange like a stock. I do like index funds and ETFs, me personally. I do like the idea of them because they won't go up as fast as a singular stock, but they won't fall as far or as fast as a singular stock either. So they are less volatile. Volatility is the word you will hear thrown around in the stock market. Let's get financially savvy because it's Saturdays, right? So I do love the idea of getting into these index funds. All right, today RVI2 includes 80 private companies. Now that's one thing I wanted to get to because if you look right here, RVI doesn't have that many. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Not 11, 11. And it's funny, that was 11 labs. Bars, maybe? I don't know. So what was it, 13? So they have 13. They have 12 with the cash equivalencies. So now they have 80. 80, not 18, 80. And that is tremendous because I bet you, given that mission statement right here or the reason why, they talked about us being locked out of private companies in their earliest stages, which can be among the biggest wealth creation opportunities available. What are they talking about? So when companies, especially like tech startups, they go to a place called like Y Combinator or whatever, and they put a team together. They have an idea. They start actually putting the idea together, whether it's an app, whether it's a website, whether it's an actual, whatever the business looks like, right? It's a product or whatever. They put the business together. When they first are looking for venture capitalists or VCs, you may hear, they may offer them shares at $2 a pop, 50 cents a piece. And so these accredited investors, these venture capitalists, those are just people that have wealth, capital they're looking to deploy into companies that are startups, right? So what they do is they invest. I'll give you $1 million, and they're gonna give it to them $1 a share. So with $1 million, they just bought 1 million shares. Well, they do their 3, 4 funding rounds. And then by the time that company is IPOing at $40, that millionaire, he's already a millionaire, right? He just went from $1, his share being worth $1 to $40. That's $39 worth of equity. And if you can do simple math, or if you can't, either way, I can. $39 times 1 million is $39 million. That is what a venture capitalist does. And then when it IPOs, they'll let all the retail investors run it up to $50 per share. So now you subtract $1 it was worth that he bought it for from 50, and you have 49. So now that 49 times 1 million shares is $49 million. So they can just completely liquidate all of that. They get their original $1 million back with a times 48 on it, right? And so that's what they're saying when they start up. The most lucrative period is when they do that first round of funding. Robinhood's trying to get into companies when they're doing that or before they do that first round of funding. If they can do that, it's going to be a powerful, powerful investment tool for us retail investors. I mean, I'm excited about this. I don't know if y'all could tell, but I can speak about this all day because I do study, I do read, I do a lot of research on this kind of stuff. And so it matters to me. I hadn't even seen this article yet. I just pulled it up and got ready to read it here. All right. So now we know all about that. So there are 80 companies. Now let's read a little more into this. RVI's goal is to make seed investments in promising companies across sectors that demonstrate significant growth potential, with a focus on companies that are current or previous participators in Y Combinator Startup Accelerator Program, or companies with a founder and a co-founder that has participated in the Y Combinator Starter Accelerator Program. I learned about Y Combinator, I think about 3 years ago, when there was a guy, I cannot remember his name, but if you go on the Earn Your Leisure's platform and search Y Combinator, you'll see a guy pop up, and it'll have an episode about it. And he talked all about Y Combinator and taught what it was. So I jotted the note Y Combinator and I went and looked it up. What is this? And he talked about all about how it goes, who goes to Y Combinator, and venture capitalists galore are there looking. It's like not quite like Shark Tank, like, nah, I'm not going to invest, or I am going to invest, get out. Not like the Donald Trump, you're fired, apprentice style, but they're looking to give their capital to a good idea. But anyway, that's why I said Y Combinator, because I watched that episode a couple times, 2 or 3 actually, and I took copious notes on it. Okay, So since 2005, Y Combinator has funded over 5,000 companies with a combined value of $1.3 trillion, including 100 unicorns with valuations over $1 billion. All right, the next generation of promising startups is being built today. Sela Pinto, now I know who that is, head of Robinhood Ventures with Robinhood Ventures Fund II, retail investors no longer have to wait until a company's IPO to be a part of growth journey, an early growth journey. Yeah, folks, this is big. And only a few people will really catch how big this is. Because not everybody cares about investing. They probably will one day, but their 50-year-old self, if they could reach back and touch him right now, would they hug him or slap him? Most people are going to come out with a handprint. That 50-year-old self is going to put some horsepower and torque behind that slap because we're just not thinking when we're in our 20s about our 50-year-old selves. And that's really disrespecting the 50-year-old self because the things you're going to care about then probably matter right now, like health, right? But if you're being just hands in the air, party all the time, that 50-year-old you is going to suffer. But anyway, this is why I'm very excited about Robinhood Ventures. Too, but I think that's enough for now. I'll come back to this. What I want to get to is this video. And it's 11 minutes, so let's get it.
Welcome to Palo Alto. With a population of 67,000 people, this may look at first glance like a sleepy California town.
Let me pause right here. So Palo Alto, Palo Alto, that's what he said. That's where Robinhood is headquartered. No, they're not. They're somewhere else. Where are they headquartered? What is it called? Hold on. Give me 1 second. It is Menlo Park. So I found out Palo Alto, Menlo Park, and all these little places that you may hear about are actually a part of Silicon Valley. I didn't know that. A buddy of mine at the gym told me that the other day because he works for HP, and HP was actually the first Silicon Valley company. What did he say? Back in the 40s or something like that? I don't know. But he did tell me the other day, and that's where he was. And when I was leaving the gym early today to get home for this and a lot of other stuff I have to do before I bounce out tomorrow, he was walking in just back from Silicon Valley. So that's what I wanted to say. So now you know what they're talking about, where they are.
But it's the hotbed of global innovation, located in the heart of Silicon Valley. Since the 1930s, this small enclave has generated wave after wave of public companies that have defined the modern technology industry. Our story begins at Cooper Cafe, where the next generation of entrepreneurs can often be found writing business plans and networking. Here, we see Vlad and Shiv, the CEO and CFO of Robinhood. Formed 13 years ago out of a small apartment in Palo Alto, Robinhood has already made a case for entry into the pantheon of the greats. Just last year, it was added to the S&P 500.
That's right.
Joining the select ranks of the country's most important publicly traded
S&P
companies.
500.
This might look like a casual coffee for the two executives, but it's not. Let's take a closer look and explore one of the least accessible corners of the financial industry, early stage investing.
Yep.
You know, Shiv, one of the things I really love most about early stage investing is that although the check sizes are smaller, it feels much more consequential, doesn't it?
At late stages, it's often about fighting for allocations. But at the early stage, your investment could be the difference between the company getting off the ground or not.
It really is all about the founders. You know, I had a good feeling about those guys. They struck me as burn the boats, no backup plan kind of guys.
Burn the
I
ships.
agree. They seem committed and grinders. In this AI gold rush, everyone wants to be a founder, which makes it even more important to be disciplined and rigorous in founder selection.
Two words that describe you very well. It's like when Sequoia led that 2 million round into NVIDIA at a 6 million valuation.
Yeah, what did he say again?
Don Valentine said, if you lose this money, I'm gonna kill you.
He was joking, right?
Well, I don't know. You never hear about all the chip founders that didn't make it, do you?
No, you do not.
Today, Robinhood Ventures will be taking one of the biggest leaps forwards in their mission to democratize private markets. What they're about to offer has, to my knowledge, never been available to everyday investors before.
That's right.
Later that day, Vlad and Shiv returned to their office, just a stone's throw away from Cooper Cafe, to share more about this new fund.
As you may know, less than 6 months ago, we launched RVII.
That's right.
Robinhood Ventures Fund I. And this was the first step in our mission to unlock ownership to private markets. Well over 100,000 individual investors on Robinhood participated in the
All right, so you heard it. It's not RVI, it's RV1. And now you know, because they were planning a 2 all along.
It was the first step in our mission to unlock ownership to private markets. Well over 100,000 individual investors on Robinhood participated in the RV1 IPO, which I think makes it one of the most democratic venture funds in history.
Our goal with Fund 1 was not just to open the doors to private investment, but to blow the hinges completely off.
Let's
For
go.
all Robinhood investors and beyond.
You know I love that.
And thus far, the results speak for themselves.
That's
But
right.
Fund 1 was just step 1 for Robinhood Ventures. It offered access to many companies you've heard of, like OpenAI and Databricks.
That's right.
Now it wants to offer access to companies you've never heard of, like these.
That's true.
And this is what makes RV2 groundbreaking.
And I wonder if you can find any of these on Start Engine. Start Engine is a platform where they bring a lot of those Y Combinator companies online for retail investors to get in through crowdfunding, right? It's either you're using the legacy funding methods and funding rounds and accredited investors with $1 million net worths, or you're using crowdfunding. Start Engine is crowdfunding. So there's another nugget for y'all. I've said Start Engine a couple of times. I've invested in a company or two on Start Engine. Just so you know.
If you're investing at the earliest stages of a company's life cycle, when just a handful of people know about it, it may be worth tens of millions. If it becomes a household name, however, it may be worth billions.
That's right.
Uber, for example, was valued at $5 million after its seed round. Today, it's valued at over $135 billion. That's more than 2.7 million% difference. Of course, these are rare cases. So rare that those in the investing world call these startups that reach billion-dollar valuations unicorns.
Unicorns.
You know, Shiv, when I first got interested in seed investments again and taking it seriously as an asset class, there was this PitchBook study. It looked at 15 years of investments, and what they discovered was that the aggregate annualized returns for US VC investments in the seed stage had delivered the highest returns of any stage in venture capital, even accounting for higher company failures.
Yeah, I remember that study back in 2024. I think it caused a lot of institutional investors to wake up to seed investing. And personally, it's exciting to me to be directly involved at the ground level in new ideas that can change the world. It feels like you're having a real impact.
They
It's
are.
a big advantage for us to be based here in Silicon Valley at the epicenter of early stage investing, meeting with founders and working really hard to find and close these early stage companies for our customers.
We bring you now into the heart of Robinhood Ventures. Here, Sarah Pinto, the head of Robinhood Ventures, and Rich Arberman, who recently joined the team as portfolio manager, are putting the finishing touches to the launch of Fund 2.
Really quickly, I'm going to tell you, if you're looking to go to college, right? Here's a little blacksmith podcast or TBP tip, right? I think I'm going to call it that. TBP tip. That just rolled right off the tongue. if you're not going for STEM, science, technology, engineering, and math, I would probably question why you need college, right? Science, technology, engineering, and math. Medicine is in that, right? So if don't think I'm ruling out medicine. Medicine's in STEM. But if you're not going for that, um, I'd probably question if it's another one of these 1,050 humanities. I'd probably question it. But notice what they just said. She is the head of RV2 and he's the portfolio manager, right? That's a money guy. That's probably a guy who went for school for accounting or something money related like that. Hedge fund managing, stuff like that. Finance is a big one, folks. That's the TBP tip.
We have a very simple but really challenging mission: opening the doors to one of the most inaccessible asset classes in the world, early stage venture.
And investing in early stage startups requires a very different strategy than investing in mature public companies. Sure, the risks are higher, but so are the potential rewards. Most startups don't make it, but some go on to change the world. It's our job to find those companies. This requires a portfolio both large and diverse enough to capture the outliers.
This is why RV2 is starting as a seed investor in dozens of the most promising startups we found. Our plan over time is to grow the portfolio to hundreds of such companies.
Now you may be wondering, how does the team find all these young companies? What are the criteria that allow them to decide an
Y
idea and a team
Combinator,
is worth
the
investing
place
in?
to bring
And
the
how can they
company.
increase the chances of finding companies with significant growth potential? To find out, let's learn more about Rich.
I started a company with my best friend and college roommate in 2008, during the greatest recession since the Great Depression.
That's right.
At that time, nobody was investing in early stage startups at all, especially two kids right out of college that have never built a business before. But we heard of this new program called Y Combinator, which was writing checks to first-time founders. We applied, got in, and over the next decade, we built that company to over $100 million in annual revenue before selling it to JP Morgan Chase.
During this time, Y
Good
Combinator
God.
grew from a tiny outfit on the outskirts of Silicon Valley to the center of the startup universe. Since 2005, Y Combinator has produced over 5,000 companies.
Look at those companies. Airbnb, you've probably heard of it and you probably use one. Dropbox, Instacart, I've used it. DoorDash, those are some of the unicorns. They already mentioned Uber.
With a combined value of over $1.3 trillion, including 100 unicorns, with valuations over $1 billion, such as Airbnb, Dropbox, Instacart, and DoorDash.
The results were impossible for me to ignore. After selling my company, I joined YC as a visiting partner, and I've been investing in that ecosystem ever since. It was not a difficult decision at all. Considering our track record, I believe YC offers the highest concentration of high potential startups in the world. So that's exactly where we started for RV2.
So think about it. If you had $1 million net worth, and you look at all these companies starting from YC or Y Combinator, right? Wouldn't you invest your money there because they're going to bring on the brightest and the best? Now, here's the thing. Not every one of these companies are going to be a unicorn, which started from nothing and wound up with a $1 billion valuation. Some of them will get, like him, some of their CEOs will sell to a larger corporation like he did. I think it was a very smart idea. Some people are like, well, why don't you keep it going? Listen, man, first and foremost, there's a couple reasons to not sell. I'll just talk about them really quickly. You might get chewed up if you're in somebody else's sector and they're already the Goliath of that sector. They have enough money, lawyers, and ways to just wipe you out. They could just go start what you're starting and make it bigger than yours because their name is attached to it. Or you could sell for $100 million, right? So that's one of the biggest ones, right? Sell it and then go do it again. or take those dollars now that you have all that net worth, and not buy something stupid like a Lamborghini, but go back to Y Combinator where you just came from and find the next couple startups and 200,000, 200,000, 200,000, 200,000. Because let's say they only get to $500 million valuation. Didn't you just still 10x your dollar or increase your dollar? So they may not all be unicorns, and that's okay, but you're still increasing your net worth. So that was very, very smart to start at Y Combinator.
We imagined if we invested in every YC company since YC's founding in 2005, what would that portfolio look like today?
See?
Then we thought, what if instead we only invested in the most promising of those companies coming out of Y Combinator now, based on our assessment of the founding team, market opportunity, and early trajectory?
You know what I'm hearing? Y Combinator might actually IPO, or they may actually shake hands with Y Combinator and get every single company coming through there.
It was through that idea that Fund II was born. A basket of 80 companies from Y Combinator's newest cohorts this year that we believe have the most potential. What's most exciting about these is not just that they're new companies, but they're also new ideas. From a compact nuclear reactor to an entirely new air traffic control system.
And that's just RV2 starting point.
Now
They
I'm
tell me
interested.
not only will they be evaluating future cohorts of Y Combinator companies for the fund, but also looking beyond the ecosystem in search of young companies finding solutions for tomorrow's world.
We're almost
One of the
done.
more interesting aspects of Robinhood Ventures, however, is not the companies themselves, but the way they've democratized the venture model itself. This means no accreditation requirements. The fund is open to all investors, no matter how much they make or what their net worth is. No minimum investment. With RV2, investors can put in as much or as little as they want. In fact, if they just want a fractional share, they can get that after the IPO. And finally, daily liquidity. Early stage investments are known for their long illiquidity, but with RV2, investors can sell as little or as many of their shares as they want, or buy more at any time.
So with Robinhood
Game
Ventures
over.
Fund II, we're breaking down these barriers and actually building a new model of seed investing accessible for all our investors. It'll look like this in the app for customers who want access in the IPO. Okay, so first here, they would just type RVII in the search bar, click enter, and then they would get to the fund detail page here, which looks like this. And then they could look at what's in the fund, scroll down and see all the companies in the portfolio, and then actually see who are the founders and what the companies do. And then importantly, to request shares, they would click here, which would take them to this screen. And then they would enter the number of shares, click review, swipe, and then they're good to go.
That's it? That's all it takes?
And that is
That's how I did
it. RV2 is open as of today for customers to request IPO shares until August 12th.
This is truly N of one. I've never seen anything like it before, and I believe it'll change the industry. As Robinhood Ventures continues to scale, our goal is
Changing
for
the
it to be
world.
an anomaly to not have retail in your seed or Series A cap table.
Customers are tired of waiting on the sidelines while their favorite companies stay private, watching as they continue to grow without any way to participate.
You know, Shiv, maybe this will even lead to more entrepreneurship in this country.
Oh,
And so we leave
definitely
Vlad,
would.
Shiv and the RV2 team in Silicon Valley with dozens of companies in a portfolio that has only just begun. I know that I, for one, will be wishing them well in the name of broad ownership for the betterment of a free, stable and prosperous society.
All right, folks, that is it. That be all. I'm going to tell you something. I am totally excited about that. But there you have RVI, and there you have the episode, the end of Financially Savvy Saturdays for today, for this week, I should say. I am your host, Will B, TBP, that be me, and the forge is going cold. If you have questions, comments, concerns, you can always email me at theblacksmithpodcast@gmail.com. I have a Discord. Just look up the Blacksmith Podcast server. I think that's about it. The forge is going cold. I thank you. I love you. And I will see you again next week. Y'all have a great week. The next time you'll see me, I'll be reporting in from Rhode Island. Nice,